All right, hey there. Good morning, everybody. Christopher Inch with Texas West Capital. It's just a few minutes after 11 a.m. Central Standard Time here on, what is it now? It's Tuesday, the 21st of June, 2022. And man, oh man, what a weekend, right? So everybody long the bottom, right? Everybody's got proof of that, right? Except for your big accounts, who most of them out there are pretty much saying, hey, guess what, guys? We still got 16,000, 10,000, 5,000, 1,000, whatever, I can't guarantee, guys, just like anybody else, you can't guarantee what people are actually, or not what people, but what the market's actually going to do, right? We do the best with what we can. What we've noticed, though, is that there were a lot of bottom signals coming in as we reach that 20,000 area. And we can also notice that those large accounts are getting louder and louder the higher that price rallies, right? So we're going to take a look at that today. We're going to look at the DXY, the dollar there, kind of see what's going on with that. We'll take a look at some stocks, maybe gold, silver, oil, maybe even natural gas, stuff like that. Usual stuff, guys. See what's going on there. As always, if you haven't yet, guys, you can join us, howtotradetowin.com. Oh man. Tier 3 is where it's at. Well over 200 hours of educational video content, 3 live streams usually a week. Mondays we talk about Wyckoff. Thursdays we talk about Elliott wave theory. And then Wednesdays we do tips, tricks, and techniques. The last 4 weeks maybe, on Wednesdays, I've been teaching price action, naked price action. So, not using volume or anything else. And sometimes incorporating showing you how the confluence is there. But again, guys, let me make it clear right now, all right? If you've got somebody out there telling you that the only way to trade successfully is to do what they're doing, just go the other way, guys. Those people, they just don't get it. Either they know that they're lying to you and they're just trying to get you hyped up to get your money, or probably even worse is they don't know. They don't have a clue. They really believe that. What I've done over the last 5 years with you guys is I've shown you that whether you're trading Wyckoff or Elliott wave or whatever else you're doing, all those targets kind of come to the same areas. People on Twitter, crypto Twitter and all the social media, this was big during 2017. Every week somebody would be trying something new. And, it doesn't work. They'd half-ass it for a day and a half and then say, it doesn't work. Come on, guys. You're smarter than that. Like anything else in life, it takes time, it takes practice to get good at something, right? So that's what we gotta do. Anyway, so, what you get in here, you don't get me telling you any of that nonsense. I don't say this is definitely the way to do it. I say, listen, here are the ways to do it. Here's the proper way to do it. Now practice, let's go through it. If you got questions, ask me, we'll go through it. Anyway, a whole bunch of stuff there. We'd love to have you there, all right? Other things here real quick, guys, in case you haven't done this yet, make sure you do. You've got some free stuff here. If you come over here to my Twitter page here or across the other social media properties that we have, first of all, I'll be on Forex Analytics tomorrow morning, 8:30 a.m. Central Standard Time. Eastern Standard Time. Over there at Elliott Wave International, if you use this code TXWC with this link right here, you can get this course that they usually sell over there. You can get it for free on candlesticks. Okay, so free alpha, man, free education, guys. Don't pass it up. And then we also have, I don't see it on here though. Oh my gosh, where is it? Well, I've got one more anyway. You guys may have seen it. Sometimes it doesn't show up on my end. We have they've got a Thursday thing, and so they've given me a link for you guys to use. They've only given it to I guess a few of their partners that they work with, but you can anyway get in that. Just keep watching my feed here and it'll pop up at some point, and sign up for that. Like I said, it's free. It's a crypto trading with Elliott wave and whatnot. Going to be there on Thursday, I believe it is. So check that out too. I don't know why it's not showing up here. It was showing up here a minute ago. Let me see. I'm just trying to look through here, see if I can figure out where it may be here, since it's not really showing up right there. Oh, you know what? Let's see if it does right here. Yeah, see, here it is right here. So, what is it? Crypto trading time-tested strategies for volatility, June 28th, 11 a.m. Eastern Standard Time. Learning how to apply Elliott wave analysis specifically to trading cryptos in periods of intense volatility. And so the link's right there, so you guys can pop on that link right there and sign up for it, and you'll be able to do that for free. Okay, guys? So there you go. Finally, one other thing here. So I started a newsletter last year. We did it for a while there on with Review, which is what Twitter uses for their newsletter. Oh man, I'll tell you what, that system just really kind of sucks. It's it's so basic and you just can't really do much with it. So I've got Substack. I've got some newsletters I'm going to start releasing. We've got currencies in the FX market right here, FXtra. Market breakdown is going to be a continuation of that one, which just looks at macro headlines and events from the week and kind of discusses them in a way that's easier to understand. A lot of that stuff, we found that a lot of people didn't really understand what reverse repo was, how banks really work. The fact that the Fed, it doesn't, guys, everybody's like, oh, we're going hyperinflation because the Fed prints all this money. But the fact is, it doesn't matter what the Fed prints. That money is legally not allowed to come directly to you. It has to go through a bank. The banks are where that money actually is created. The Fed could create infinite amount of money as long as it stays behind the banks, though. It doesn't come out, and it can't come out anywhere other than through the banks, then it doesn't mean anything. So anyways, we went through a lot of explanation on that whatnot. If you are already signed up for the market breakdown there, subscribe to it. I'm going to transfer you guys over to this one, and we'll be getting that going. I've got an applied socioeconomic theory one, trade psych digest, which is about trader psychology, and then options forecaster. This one's going to be huge, guys. I've been, talking about getting options going here for a while, and so weekly we're going to be talking about options as well as options buy and sell signals. Now this one, I'm definitely going to be charging for. Maybe not right at first. So go ahead and get signed up for it. You won't get charged unless you know you're going to get charged. So it's not like you sign up for free and, oh my gosh, you're going to get charged. That's not the way it's going to be. You guys will know. But anyway, hey, sign up for these. Just go to substack.com and then search my name, Christopher Inks. And you can see here, it comes down just right here, 5 down. Those are those. By the way, guys, we are looking to hire a few analysts. So if you are good with Elliott Wave and or Wyckoff, and you're interested, we're going to do that. At first, it's going to be, we're going to hire you through as an independent contractor, and we'll see how that works out. And as long as things are going good, we'll look to pull you on with us. So we're going to do that over the next few months, as well as over the next month, releasing these newsletters here. All right. So anyway, lots of stuff going on there, right? Let's see here. Let's go with this chart first. Who's here already? Let's see. I've got Data here. I've got Jeff B. What's going on, guys? Hank is here. Andy is here. Andrew Bennett. Dancer Eddie, what's up, man? Come from beautiful New Jersey, huh? Let me see here. Wazobia Dollars is here. Hank is here. Who else is here? Is that Abdel Lozano? Good morning. Ah, okay. I see you. You said the 10-second chart trading on Saturday. Oh, you mean Sunday was nuts? You basically bid the local bottom. Yeah, well, that was the whole reason, right? That's why we did that. Hangry Patrick, what's up, man? Good to see you here. Name Mr. Wilkes is here. Crypto Critical. Good to see you guys here. So for those of you that don't know, what I tend to do is when it appears there's a bottom, I will usually either live stream or just live chat with as it's happening with our members. And so I did it over here and talked about the bottom being right here. I did it right here, talked about the bottom being in, and then did it again Sunday right here. I've posted the the initial buy I did. Got stopped out of the initial buy, but I've gone on and bought 4 or 5 times more. I posted that this morning. Since then, but basically saying this looked like it was probably the bottom. Now, there's no guarantee yet, guys. There's there's still more to go. So, I'm not going to sit here and, blow smoke up your rear end and, like a lot of people do out there and say, hey, guess what? That's all, right? No, but I'm going to be honest with you guys. If the count is correct, then the bottom should be in. And we'll go into why here in a minute. But this right here is the BLX, okay? So as you know, the BLX updates daily. And this is actually the weekly chart for it. This is this area down here where I told you all to watch for. And you can see that we popped right off the EQ of that, this demand structure right here. And so heading up here, again, the idea being we've got an A, B, C for W, we've got an X, and then an A, B, C for Y. So that's kind of what we're looking at. You can see that we almost hit the 50% retracement. Solid wave 4. Wave 4's, initial target is 38.2. Secondary target is 50%, right? So a lot going on in there. Now, I have floated the idea, what if this is only, what if this is 1, 2, 3, 4, and 5, right? Which, by the way, we can't guarantee that this is not 5 and done here until we break out above it, right? So we trade just like we traded our way down, we trade our way back up, right? We don't blindly just go, oh, it's going to go here and then miss all these other opportunities, right? But here's the thing. Again, first time we've ever actually dipped back into the previous all-time high, right? Especially after this long sideways, right? But what if this is just 1, 2 of 5, right? Well, we'll check that out as time comes. But right now, we're looking at this as a 3 and a 4, and then get a 5 up here. If this is 4 down here and it's done, 5 has a minimum expected target up here of about 156,326. Now, if it does like it always does before, large, rally up here, strong rally last few months, then it'll likely break out above that, probably above 200,000, maybe 240. We'll have to see how this rallies from here. But again, if this is only 1 and 2 of 5, then we've got quite a bit further up to go, right? So just some things to watch there. But I mean, you can look here. I've discussed the idea that we've got on the MACD here. We've got the higher lows on this right here. I can't think of the word at the moment. So yeah, we've got it from this swing low here, W to Y. So, your major swing lows, you've got that. We've reset down. This is the weekly again, guys. Remember, this is the weekly. Reset well down in here for RSI. Stoke RSI, we bottomed out, curled back up, heading back up, looking for a breakout there. So a lot of possibility in that, right? Coming down here, you'll notice that the volume is a lot lower here than what it was here. So you had like this break here, and then not as much volume here, at least on the weekly here with the BLX. But let's go ahead and get on over here to Bitcoin, right? That would be crazy if it's just a 1-2 on Bitcoin. Yeah, no kidding, right? I mean, I have to put it out there. The possibility is there. I don't know that I think that's necessarily what's up at the moment, but the possibility is there. Peter Morgan, what's up? Jared the Great, good to see you guys. Helping 81. Hello, hello, hello. So this is the other thing we were looking at. Now, this is something I've talked to on Sunday when I was doing the live stream as we approached that low, and then as we kind of bounced off that. And I talked to Discord about it. I said, okay, well, here's the thing. Again, this ascending channel here is something that I've already shown you guys. This is the monthly. So the first thing notice is this previous monthly over here. This was the bear market low there, 2018 going into 2019, right? So this was December of 2018. The monthly right now, we're right about in that same area. So, potentially bottom right there, right? Of course, again, bottomed out over here and oversold Stoke RSI. Excuse me, we're basically bouncing right around that support. Now, here's the thing. I said, okay, let's play devil's advocate here. What if this is wave 5 and we are only in wave 3 here, right? So in that case, you get the 1618 down here around 14,832. And then I would expect, so that would be, 1, 2, 3. I'd expect a 4 up here to around 23,317 or so, 23,320. Basically rechecking this descending channel support as resistance. We get wave 5 down here around this, what is that? Oh, right here, kind of around 11,250 or so. And then, so that would give us wave A. Wave B would rally back up to this 23.3 area again. And then, of course, wave 5 would break on down further here, beyond that, as long as we got that there. So, kind of looking down, uh, maybe even as low as this kind of accumulation area here in 2000, at the 2018 swing low here, right? Potentially. Now, we do have a lot of demand sitting in this wick. This is that March 2020 wick. There's a lot of demand sitting in there. So, of course, it could hit this area, then rally up there. But that's only if. So, let's look at what's actually going on locally here, guys, right? All right. So, I've got a few different things on here just for people to look at different ways of looking at the chart, right? Again, guys, these indicators, these ways you trade, they all kind of tell you the same thing, right? So this right here is the Ichimoku cloud. It's on the crypto double settings, right? And as you can see here, rallied up, rejected, support, breakout on spike of volume here. Large candle spread came up, found support in this area, pulled off, found support on the top here. Usually on Ichimoku cloud, when you have this right here, where you've got this straight up support like this, you break out above it. Usually this area works as support. And so it did right here, kind of boom, boom, coming up. Hit the 1 hour pivot. And so usually you expect a bit of a pullback on that 1 hour pivot. Now you can look right here. So let me go ahead and turn that off now. Oops. Let's go. There we go. All right. Now we can see that we've got this supply structure up here, right? And you can see that we kind of created some sideways here, pulled back down into this previous support here, or resistance as support here. Large volume, large candle spread broke out, reject the pivot. Look where it comes back to, that same kind of previous area of supply, which now becomes demand, right? Because we flipped it, coming through with that big move. So you've got this here, boom, boom, coming up. So what are we looking at? Well, right now, the way I'm looking at it is that we've got this as potentially a leading diagonal here, and then somewhat of a running flat idea with wave 2 here. And so if we can get an impulsive breakout through here, it gives us a minimum expected wave 3 target up here at 24,900. Secondary target up here at 25,977. Now that'll get us right up into this supply structure up here. Almost at the EQ, perfectly at the EQ there, right? So I like that target. I like an overextended third. Why? Because one thing that I've told, I might have mentioned it here on the live streams, but I definitely talked to our members about, is that when Bitcoin is bullish, especially when it comes off the bottom, it's often like this relentless push up, right? It just pulls back a bit and pushes up higher, and you get these larger thrust up. Now, the thing is, I went looking through Twitter, guys, and most people still don't get it. They still think of buying and selling in terms of the retail trader. Oh, man, who has money anymore? What retail guys still have money anymore? That isn't the way it works, guys. That isn't the way it works. Retail jumps in late. They sit there and they trade along the entire way down, right? No proper risk management or anything. They're defeated by the time the bottom's in. Usually they've capitulated by then. They've sold it. They're not ready to long. Doesn't care. They're like, oh no, dead cat bounce. They always say that, right? Stop thinking that way. It's not retail that buys these bottoms, guys. Retail buys the top, not the bottom. And we're talking about in general. You can be a retail trader and do the opposite. That's great. Fantastic. Congratulations. Retail traders in general tend to buy the top where their emotions are at. Remember up here, guys? Let me see if I can do this here. Oh, there we go. Remember up here? Laser eyes, diamond hands, spaghetti fingers, all your big accounts. Remember they're telling you, buy the dip, buy the dip, buy the dip, buy the... And it gets down here and they're like, sell it, sell it, sell it. No, that wasn't what we do, right? We didn't do that, right? We were up here. I mentioned all that silliness with the stupid laser eyes things, right? And I said, man, that is showing us that's the kind of sentiment. When you're saying sentiment, I don't care what your feed says. I don't, there's algorithms that determine what you see in your feed on social media, guys. But the fact that pretty much everybody and their grandmother was doing those laser eye things, that was, up here, this is where I said, listen, it's not going to be, it doesn't have to be the top, but it's going to be a top, and sure enough, we came down, right? Down here, everybody's screaming, sell, 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 it's going way down, right? And I said, nah, I said, this looks like a flat here. I said, as long as we're above this, I said, we're going up, so expect a big move up through here, right? And sure enough, that's exactly what happened, right? So, again, your big accounts are down here now saying, oh my gosh, it's got to go down lower. And what I've noticed on Twitter over the last few days, I shouldn't have been paying attention to it, I was off, is as this continues to rally, they're getting louder and louder about how it has to go down to 16,000 and below. Guys, please understand, price does not have to do a dang thing. It's going to do whatever it does. And the nonsense about guaranteeing it's going to do something is just silliness. Stop falling for people that tell you that. Because, again, one, either they know that they're lying to you, but they're trying to tell you what you want to hear, so you jump in and follow them because they can make money off you, right? Or two, they don't, and again, two is even worse, is they don't know. They think that they can guarantee. They think that, they know what's going on. And so, it's a tough thing, guys. And a lot of times as new traders, you're going to come in and people are going to make a good call and you're going to think, oh my God, they know what they're doing. A good call where they guaranteed you, right? They had the magic guarantee word in there, right? And you're going to think, oh my God, they know what they're doing. I need to just do whatever they say to do. And then you lose all your money. Because one, you don't have any good risk management. You guys have to have proper risk management. It's what separates you. It's what separates the professional traders, those that make money consistently over time, and retail. And it's, retail as in those who lose money consistently, right? Risk management, proper risk management is where it's at, okay? So make sure you guys are doing that. YR21, what's up, man? Let me see here. Let me see. So, again, looking for some move up. Right now, there's two possibilities I see here right now, okay? One is the idea that, okay, maybe we've got this running flat here. And I think if the bottom's in, with the length of time it's been selling and whatnot, I think a short wave 2 here as a running flat and then an overextended wave 3 up here makes a lot more sense, okay? But here's the thing. Even if we just get 3 right here, it's still good. And I'll show you why in a minute. Especially for those of you that are new and don't understand what I'm about to say with that. But the other thought is maybe this is A here, this is B here, and this is C here. So now we've got A, B, and then we'll pull back down at least to this swing low area. But, again, this would be expanded flat, so probably down here toward this wave 4 support around 19,000, 19,100. But if we get this breakout here and we see it with some spike of volume, we see some nice large candle spread coming out of that. My target is, again, 24,900 or so, and then 25,977 kind of area. Now, why? Well, because here's the thing, guys. I've talked about this often. If you're just trading pivots, right? If you're just trading pivots, this is my favorite setup, okay? The idea is you come in between the pivot and the S1, and either you test the S1 or you don't, but either way, you rally up impulsively through the pivot. Usually that gives you a target of the R1 pivot, and that'll be wave 1. Wave 2 will pull back to the pivot, and usually that's around the 50%, sometimes the 38.2, but usually the 50% retracement. So you get a 1, 2, and then up. All this right here, this is a lot of inefficiency here. You've got a little bit right here around the R1 pivot, bit right here. But all this, low volume node here, easy to get through. So usually you get a harder push up, right? Now again, I said usually this is going to be the 38.2 or the 50% kind of area, right? So let's say we kind of get up here. Let's say we hit this target up here. Let's say this is 3 and then this is 5, okay? And so if we measure this out, 50% right around the current 1 hour pivot, 4 hour pivot. So, again, this is my preferred setup, especially coming off a decline, off a downtrend, is to have it where you come in sideways between, 4 hour. We'll look at the 4 hour here, right? Between the 4 hour S1 and the pivot. And then I look for a nice impulsive breakout. Above that, look for a target of the R1. And then you look at the other wave. Okay, usually that's going to be a wave 1. This becomes a wave 2, and then we go up. In terms of structure, guys, look at all this sideways right here. This sideways creates right now a ceiling. We're pushing up through it. We break out above it, it becomes a base, right? Makes sense to pull back into it, grab support, and rally back up. Again, Notice how this is pretty much just down, 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 down through here. So if we're breaking up through here, yeah, we'll go up, pull back, but we should come up into this high volume node probably around this 30,000, 30,200 area. Okay? In terms of count, look at that. That's just our larger wave 4 up here. I know it's hard to say. We got a lot of waves on there, but right here. It's the wave 4 triangles resistance right here, 30,000, 337.83. If we pop up through that, guys, I don't know why you'd still be looking short. Locally, though, we did have a triangle here, which we just broke out above. Right up here, that triangle resistance, again, sitting up here at 21,338.70, which is what we just broke out above. So if this count is correct, then this is 4. This has to be 5. This has to be circle 5 here because we've broken up above wave 4. So circle 5 cannot subdivide anymore. It's done. So now we just look for the larger wave 4 up here at 3337.83. If we break out above that, that means this number 4, this number 5 down here, that fifth wave has to be done. Once you break out above that 4, that fifth wave has to be done. It cannot subdivide any lower. And in that case, the next one we look for is parentheses B. And so as we continue up through here, that next target, that next general large target, it's going to be up here at 43,109.50. Again, this is all on Coinbase here, guys. So it'll be similar area on your other charts. But nonetheless, we break through that, and guess what? Wave C is complete now because wave C cannot subdivide any further. And at this point, we look then for wave X, right up here at 48,240. And you break out above that, and guess what? All of a sudden, at that point, let's get up here on the daily. At that point, WXY is complete. Y cannot subdivide any further, and we have a corrective decline off the swing high, which suggests new all-time high. So those are your big targets. That's what you kind of watch through there as you're going through it. Let's see here. Hate when I hit that reset, it does that. All right. So, I mean, if you're looking and you want to know where generally you're looking for, that's where you're looking for, all right? Let me see here. Crypto Nico says it's not, I guess they're talking about what I said earlier about the Fed. It's not entirely true, as since the Fed uses printed money to buy U.S. debt, then the Fed directly finances federal public policy. So, I can't see what you're saying there. Public service. So, the Fed buys U.S. debt. No. The Fed sells securities to the government or buys securities from the government through the banks. It doesn't directly interact with the government. The Fed does not go, hey, here's, however much, and I want all those treasuries. By the way, guys, in case you've been living under a rock, you may have noticed that the Fed is doing its quantitative tightening right now. That's normalizing its books. What that means is it's selling off its treasuries and its MBS. So, I always got that question as we were getting up to this point, a year, over the last year and a half, 2 years, well, where does all this extra money go? And this is where it goes. So quantitative easing, the Fed prints money, goes through banks to create loans, goes through banks to buy U.S. debt, as was mentioned here. But it has to go through the bank. It doesn't go directly, right? And so that money, then enters the system that way, right? Now, here's the thing, guys. Even though it enters the system, doesn't mean squat. If you get that money, and then you use that money to pay off debt that you owe, guess what? You send that money back to the bank to pay off a loan or a credit card or something, you're destroying those dollars. That money goes back into the bank. It destroys those dollars. If you take that money and you stick it in a savings account or you stick it under your bed and you're not spending it anywhere, that money can be printed all day long. If it's doing that, it has no effect on the prices because it's not dollars chasing those same things, right? So, again, guys, it's not just enough that, the Fed prints. It has to come out, right, through the banks. It comes out, well, does it go back in? Does it just sit there? These are all these other things. So you got everybody crying hyperinflation, and yet we have actual liquidity. We've been looking. I've been talking to you guys over the past year now, at least, about the liquidity issues that were building up, right? The dollar liquidity issues, and how the Fed was looking at opening up swap lines with other countries and whatnot because they weren't able to get the dollars, right? So guess what, guys? You can print all the money you want as long as people are getting those dollars, as long as they want them. And then they just kind of sit there. And then there's the whole euro market, and this just becomes a big, huge thing that most people have no clue about, as well as when it comes to banks, how they actually operate, the legal regulations that they have to abide by. And all these things, guys, play into whether or not the Fed's printing really means what you think it means. But I can't, it's hard to convince, most people. If they think hyperinflation's coming, they're going to sit there and going to talk about it as if it is, forever and ever, even when it doesn't. And they'll never just grasp. They'll never actually kind of buy into it and try to understand. Guys, I'm going to tell you what, if you're just, repeating all these sound bites, you're not going to get anywhere. I promise you, okay? The thing about sound bites is they always sound good. They rarely mean what they seem to mean. They're rarely legit, right? So, yeah, we'll see here, right? So anyway, so this is kind of what we're looking at right here, right? Potential some sort of leading diagonal here. Maybe ABC is 1, 2, ABC is 3, 4, ABC is 5 maybe. If so, you've got an initial target right here around that 2940 kind of area, and then you'll look down here around the 15-minute pivot at 2400, 2500, that high volume node. And that would get 1, 2 going up. I'm honestly not too worried about it at the moment. I'm looking toward this area up here, unless we pull back toward this wave 2 area. In that case, again, I'm going to look at this potentially as a wave B up here. And then we've got wave C, probably coming down here around 19076 right there. Basically the wave 4 here, support area. What is that? 19109.52 kind of area. So, yeah, so that's what I'm going to look at. So as long as we're staying away from this low area here, I'm going to look for this impulsive breakout here and rally up. But, again, guys, if the count is correct coming down, then we've broken out above wave 4, and that says, okay, well, wave 5's complete. So our next goal then becomes a breakout above the larger wave 4 up here, larger degree wave 4 at 3337.83, right? So I kind of put this up here. I added this to the chart as well for our members. I'm going to leave it up here so you guys can see it. This is the Weiss wave open interest bars. And basically, just think of it as market buying and selling, okay? And so as you see it increasing here, you've got increasing market buying going on, which means you've got demand push, right? You got bulls going, right? It follows it up. And when you have the red on the other side here, basically means bear pull, right? And so you've got the market selling, a lot more market selling going on and increasing. And so you see that coming on the down there. So, you can see how it trends up over time here. You can see that the increase here, that open interest right there, is larger than it was over here on this rally up here. Yeah, so that's what that is there. That's kind of where we're at, guys. Again, where I've bought. I posted it there, screenshots there on Twitter. So we'll see how this plays out. I've got room. If I'm wrong, I'm wrong. But as I told our members back over here, the structure of what was going on, we were on some short time frames, it looked very, very constructive. I think we were down here, we were way down here. We got to the 10-second time frame once, just kind of discussing price action as it was developing there. But if you see this range right here, you see that volume profile, I said, man, it looks like a local accumulation area there. And sure enough, nice large candle spreads, large volume, expanding volume as it rallies up through the top there. Overlapping short candles here, volume drops off. It's corrective. Again, same thing happens here then. You rally up, volume's expanding on the rally up. And then, of course, drops back down. Way down there, but it starts building here. People are excited after this little bit of sideways in the short time frames, so it starts building some sideways here again. Volume price action looks good. Pops up. Volume expands. Get the pullback on the way down. Volume drops off. Kind of doing some up and sideways. Moving here. But again, as it rallies up here, volume keeps picking up, right? So very constructive as it rallies up off there. And so the easiest thing for you guys to do is just look for this 1 hour, 4 hour pivot here. Look for a break. I'm looking for a nice large candle spread. Spike of volume as it breaks out through here. And then look for it to target, again, this 24,900 or 25,977 area for the next one up, right? I should do more 10-second time frame streams. No, you guys know. Like I said, I don't normally do that, but as I was explaining to you guys, it was because I believed that we were coming in on that bottom. That's why I stopped what I was doing that day to live stream with you guys for, about an hour and 46 minutes or so when everything was closed and I was off. I had just come back from the movies. I went out, took everyone to see the movies to see, what did we see? We saw, Jurassic World or whatever. And so on the way back, check the charts. I was like, oh, man. So I got home and went ahead and a little bit after that went ahead and went live with you guys. So just what we do. We'll see if I'm 3 for 3, right? Got the 2018, got the March 2020. Let's see if we got this one right here. We'll find out. The dino thingy that keeps the kids happy? Exactly. Crypto MTS, what's up, man? Let me see here. So anyway, so that's kind of what we're looking at here right now. Whether it ends up being a 1, 2, and a 3, or, however it's going to get up here. I'm just more interested in this larger term play right now. And the reason being, guys, again, is because if it is the bottom, we're going to see a lot of this impulsive movement up for a while. And so a lot of people are going to try and go short for normal targets. They look for normal pullbacks, but you're only going to get these shorter pullbacks for a bit. And so I'm not interested in trying to, take profit and short down until we're making bigger waves up, until we get through those bigger waves up. Now, Litecoin rallied up. Ethereum broke out of its own triangle here before Bitcoin did, which, guys, if you're looking at this, your majors, Bitcoin, Ethereum, XRP, Litecoin, all that kind of stuff, it should kind of generally follow the same structure. And so, with Ethereum popping out above its before Bitcoin did, there was little reason to think that Bitcoin wouldn't continue to push up. But we definitely need to see it continue up there, guys. You got your levels, as it moves up. And as it goes through each one of those, the larger degree wave 4s and then wave Bs and wave X and all that, as it gets through that, that's going to add more and more confidence to the idea that the bottom's in. But remember, guys, absolutely nobody out here can guarantee you anything. And if they want to, if they try to, just walk the other way. Because again, either they know they're doing it and they know they're lying to you, but they just want you to follow. So think clickbait, right? Or two, which is more dangerous, is they think they can guarantee you things like that. And now that doesn't mean somebody can't go, listen, I think it's going to do this. I feel like it's going to do this. This looks good. That's different. That's somebody that you can, actually listen to a little bit, right? As long as they're giving you actual areas of invalidation and validation levels, right? It's not just blindly, it's going to go here. You got to make it through areas that kind of give you more and more confidence. That's how you trade, guys. Otherwise, doing that other way, you're going to get caught. And when you get caught, you're going to lose a lot of money. I've seen it all throughout the 25 years I've been doing this. I've seen it. I've been in crypto now since January of 2017. And so I've seen it since then over and over again. These big accounts, they do great marketing. Guys, look, I've been doing this publicly here since 2017, right? Look at my followers. What, 29,000. I don't have anywhere near 100,000 or more, right? Because I'll admit, I'm not here just to do the marketing that gets you to click. I figure if you're going to follow me, you're going to follow me because you're really interested in learning, really interested in understanding. I'm not that guy that can go out there and say, listen, and put the clickbait out there just to get you. It's just stupid. How does that help you out any? But you got other guys out there who do that, and that's what they're good at, and they don't care. And so they tell you what you want to hear, or they scare you, or whatever. They make things seem really weird and really crazy. They make you think that price action is mystical. They make you think that that the whales are are forcing you out, they're stealing your money, that Wall Street is stealing your money. It's so much nonsense, guys. This is a market. Okay? And if the market is bullish, it doesn't matter what whale or Wall Street is selling into it. It might take a little bit of a push the other way, but it's going to head back the other way. It's not going to change the trend, the market's trend. This is the thing that most people don't get. Right? And they tell you it's magical. They tell you there's a secret way thing. I saw some ads this weekend. Oh, God, man, for the email. I don't know whoever thought it's a good thing if you're a business to just spam people's email. It's like the dumbest thing. I'll never buy from you. I'll publicly shame you. Anyway, I would with this company if I could remember who it was. But they were talking about, what was it? Oh, the secret stocks that Wall Street's hiding from you. Oh, my God. Come on, guys. That's nonsense. Don't fall for it. They're pushing your buttons. They're getting you, excited, wanting to know. Again, everybody tries to make you think it's mystical because they think, oh, my God, if people understand that it's not mystical, it's not magical, then they're not going to listen to me. They're not going to buy from me. So they load you up with nonsense and BS, guys. Stop falling for it. All right? You guys are better than that. All right. Chris, what's up, man? It says, why is Elliott Wave so popular? Didn't he die poor? Listen, man. So Elliott Wave is popular because people want to know where things are headed. Now, unfortunately, most people use Elliott Wave to try and tell them exactly where price is going. The best way to use Elliott Wave is to understand trends. Guess what, guys? To be a successful trader, here's the key. Identify the trend, get in the trend, get out of the trend before it's done. Lock in those profits. If you can do those three things while using proper risk management, you're going to be a successful trader. But people instead, they want to sell the absolute top. They want to buy the absolute bottom. That's silliness. We rarely get there, guys. Rarely get there. The absolute tops and absolute bottoms are just events. Your accumulation and your distribution happen in ranges, in areas. So your bottoms and your tops are actually areas, not the absolute lowest or absolute highest. All right? So, it's all in how you use it, how you understand it, guys. I think, new traders come in here and they don't know what they're doing. So they think all these things that everybody seems to think when they first come in. I thought it when I first came in. You guys know my story, right? And that's why I know what you're thinking when you come in, because pretty much everybody does. I've talked to thousands of traders over the last quarter of a century, and practically everybody comes in thinking the same thing. And practically everybody ends out in the first 3 months. They blew all their money. Sometimes they added more. Many times they added more along the way. Out in 90 days, guys. So what does that tell you? Well, it tells you that obviously the way you're coming in, thinking things may not be the way that it is, right? I think that's a huge thing, guys. If you can lock your head around that, if you can get your head around that and go, oh, and open your mind up to the possibility that maybe what you think is the way things are, maybe really isn't, you set yourself on a lot better path as far as being successful. But I'm going to tell you what, guys, especially if you're brand new, proper risk management is the number one thing. You guys come in here and you want to learn how to do Elliott Wave, how to do Wyckoff, how to do, if you're following me, supply and demand structures, things like that, right? How to do resistance flips and stuff like that, right? But in reality, the first and most important thing you should ever learn is proper risk management, because you're going to screw up a lot when you're new. There's no two ways about it, guys. You are not going to become a successful trader overnight. It's going to take months, if not years, to get there. But I always tell people, what are you doing anyway, right? If it takes you 5 years, 10 years to get where you want to get financially, wealth-wise, so what? What are you doing anyway? You just be doing your work and struggling and whatever anyway. At least this way, you're building that wealth, right? You're learning how to, you're learning this skill that can help you out. But, most traders come in and they want to be millionaires yesterday. And so it's all in, gung-ho, over-leveraged, oversized, no idea about proper risk management, getting wiped out left and right again and again and again. And then what? What have you got for yourself? Nothing. And then you go, technical analysis doesn't work. Wall Street stole my money. All that nonsense. Nobody stole your money. You lost your money. And you lost your money because you were ignorant. And you chose to remain ignorant. Guys, I'm telling you, there is nowhere else where it is more important to have, to really kind of just understand yourself, to have, to accept responsibility. I mean, it's imperative in life to learn to accept responsibility. Most people don't. Most people don't know how, choose not to. It's everybody else's fault. Everybody, you're always a victim, right? Because then you don't have any responsibility. That's great. You can blame on everybody else. Problem is you stay there. You never get beyond that. Think of that in trading. If everything's always everybody else's fault when you're trading, never your fault. It's some account you're following that was wrong, right? In a situation where there are no guarantees, right? And you don't know proper risk management, but you jumped in all anyway. But it's their fault, right? Come on, guys. No. But see, if you don't understand that you have to learn to accept responsibility for these things, you will forever be stuck there thinking that you have no control over your life. And I'll tell you what, guys, if you think you don't have any control over your life, you better not get into trading, because it's just going to eat up all your money. You have to believe you can affect change in your own life, that you control your outcome. And it may not always go exactly as you think, but you're looking, again, like trading. You're not looking at the exact day-to-day, second-to-second what's going on. You're looking at, is your life going where you want it? Are you trending in the direction that you want to go? There's always going to be setbacks, guys. But you have to believe that you can affect change in your life, that you can create the change, that you can create the future that you want. Otherwise, why are you in trading? You can't. If you don't believe that, then how do you believe you can predict where price is going to go? By the way, we don't predict, we forecast, right? How do you believe you can forecast where it's going to go if you don't believe that you have control? You have to believe you have control, guys. You have to understand that you do. There's this, gosh, man. So I'm old, right? I'm nearing 50. And when I was a teenager, one of the best things I ever heard, and I heard it from my football coach, right? So I played football growing up. And he used to have this saying, and I can't remember who he got it from, some football coach, I think NFL coach. Anyway, it was, whether you believe you can or you can't, you're correct. You're right. And what that means is, it's not that you can't, it's that you believe you can't. If you believe you can do it, you're going to find a way to do it. You're going to find a way to make it happen. And so it's the difference between being a victim and being in charge of your life. Man, that has stuck with me for, 30 some more years now. And it's true, man. It's true, right? If you guys don't understand that's true, man, I don't know what else to say, guys. There's so much there, right? Let me see here. So, Chris, yeah, I hope that it, helps you understand about Elliott wave and whatnot, right? So, Elliott wave is best used as a tool to get general ideas of price targets, but really the most effective way to use this is to understand what the trend is and where it may change. You always have to have confirmations, validation, invalidation levels. That's the other things we were talking about here, right? Let me see here. Helpin' 81 says, what about the ETF to short Bitcoin? Schiff and Gates finally do it? Schiff? Oh, Schiff. Well, it's funny. It comes in after we've already had this significant drop, right? So we've already had this huge drop, right? We've already had all this money out. It's been a while coming. Everybody's like, oh, we're just now entering the winter, right? The Bitcoin winter, right? Well, what the hell was all this? Yeah, we made a slightly new higher high here, but guys, this is sideways for a year and a half here. 2 years. Sideways. What the heck was this? You think we're just now entering that Bitcoin winter? It doesn't make a whole lot of sense, does it? If you think about it. Again, what the heck was all this? Yeah. Anyway, price action volume on the daily, looking good here. We've got a daily bullish engulfing candle a couple of days ago off the bottom. I'm not sure I'd really call these tweezer bottoms. What was that? 17,567 and 17,934. Maybe a little bit spread for me, but still bullish engulfing off the bottom. Yesterday sideways as we hit this area right here, right? Today rallying up, trying to hit this target up here, 22,700 or so, 600. But again, guys, remember what I told you about that down? Look at this right here. Look at all this volume here. So if we're popping up through here, we should pop up through this pretty easily, right? Now, we do have supply right here in this wick, right? So the EQ is right there around that 27, 27 and a half. Where does that put us on the targets here? Oh, I did it again. All right, let's see here. 27. All right, 27 and a half, right? About that area. So that'll get us just a little bit up here. So, I'm looking a little bit below that for this target potentially. But again, if this is an overextended wave 3, let me see, what would we get here? If that's going to be a wave 3 right there, if we get that overextension, this count kind of holds. Let's say we get that pullback 38.2, 27 and a half. That gives us wave 5 right there where we were talking about on that daily. So yeah, so if wave 3 ends up here, we should pull back down toward this area and then up there toward that 27 and a half. You see a small bit of high volume node here coming in as well. So yeah, makes sense there. I think Hank wanted to talk about a possible, I hate these patterns, head and shoulders, because they're so easy to misinterpret, right? Right here. I think if it, this doesn't fit into much of anything here. I don't know. Yeah, see, this coming out here doesn't really work for me. I mean, if we were to pull back, if this was, again, B and we had C down here, maybe that way, I think. Maybe. So we kind of get this, again, the idea we got a 1 here, and then we have an A, and then a B, and then we'll have a C as an expanded flat coming down here. That would interest me as far as an inverted head and shoulders goes. That would really interest me. But I think anything else, I don't like the way it lines up. It doesn't make a whole lot of sense with that. The whole world calls for 23, so if we get the reverse, then I'll go massively short. See, the thing is, people are calling for left and right, but most retail traders aren't doing anything. Again, guys, most retail traders have been wiped out coming down here. Improper risk management, leveraged out the gills, trying to long every drop along the way without taking profits. They're not down here. It doesn't matter what some Yahoo on Twitter is calling, right? I'm that Yahoo right now. I'm not calling for anything. I'm just saying, listen, if we're doing this, then we're looking at that, right? But yeah, again, guys, that comes from that whole idea that everybody is interested, in other levels that, that they're trying to guarantee you may be coming through. And, again, that can be dangerous following that, right? Let me see here. Chris Lee's eyes. Did I see your earlier question about the Bitcoin wave 2 and a larger wave 3 current? No, you'll have to tell me. You'll have to repeat that, please. Yeah, we got the DXY coming in. What's up, Mike Slane? Chris says, just was curious about the Elliott wave since hundreds of strategies indicators, just trying to find the most successful ones to concentrate on as a new trader. Hey, listen, here's the best thing, man. Or woman, I can't tell from the picture. I'm sorry if you are female and I offended you. I did not mean to. The one thing that new traders really need to understand is just pick something, just one thing. Whether it's Elliott wave, whether it's Wyckoff, whether it's support resistant level flip, stuff like whatever it is, just pick one and stick with it until you learn it well, until you get good at it. It's like any other thing. If you want to learn to play the piano, you got to jump in there day after day and practice and practice and practice. If you want to become, a great football or soccer player or whatever, again, you got to go in day after day and practice and practice and practice. But you have to practice correctly, right? And often that's where coaches or mentors come in because they help you steer clear of a lot of the nonsense. But trading, guys, just because you can jump in there and do it, just because you can fund an account and do it, it's like politics and religion. Doesn't mean you really know what's going on. Okay? But we'll get off the politics and religious part. Trading is a skill. And so all these ways of doing it generally lead to the same targets. This is something I show day in, day out to our members, right? And usually you guys here on Tuesdays and Fridays. So it doesn't matter what you pick, just pick something and then do it and trade it and, practice with it day in and day out because you're going to be awful with it, whatever it is at first. Again, most new traders come in and they hop from system to system, from theory to theory. This was big in 2017 in crypto. Every week was something new. And the problem is they go in and, like I said, they don't really practice, kind of half-ass it, right? For like a day and a half, and then they go, oh, it doesn't work. And the next week it's something else, and the next week it's something else. Never actually spend the time to get good at something. So that's what it is. Don't worry about what everybody else is doing. Just pick something that speaks to you. We all look at things differently. We all learn differently. And for some people, Elliott Wave really shouts at them. Some people, it's Wyckoff. Some people, it's whatever. Some people, it's pivots. Just look at whatever makes the most sense to you and then work with that first. And don't worry about anything else until you get good at that. That's probably the best advice I can give you guys if you're newer traders. And what I mean by newer traders, guys, are even those who have been trading for years but not consistently profitable. You're still a new trader. You still haven't gotten it yet. You still haven't accepted the reality of trading yet. Okay? And that's not a put down. That's just reality of where you are. And the sooner you accept where you are, again, it's like accepting responsibility. You can go, okay, now I can do something about it. As long as you guys don't accept responsibility for what you're doing, you can't do anything about it, right? That's the goal, though. You have to be able to learn that just being human, that's what it's all about, right? So, let's see, the question here, is it possible that it's currently in wave 2 of a larger wave 3 in a correctional C? Anything's possible. I'm just speaking randomly here. Let me see here. I'm not sure where your waves would be. Wave 2 of a larger wave 3. Okay, so I assume. I'm not sure. You'd have to tell me where your waves are here. Let me see here. Here's the swing high up here. Let me kind of zoom out a bit more. Here's Hank's favorite chart, 12 hour. Excuse me. Got that bullish divergence right here on the 12 hour. Let that break out there. So this would be a 1-2, I assume. Leg C of ABC. Okay, so you're saying maybe this is X and Y, kind of like, or WX, right? And then I guess you're looking maybe like ABC, maybe? Leg C of ABC at XY. He has it 1-2, beginning 3. I guess you're looking here then, maybe? I'd really have to see what your chart looks like, man, to understand really where you're looking at, right? I think the best way to look at this is, do you get an impulsive breakout here on this larger time frame, 12-hour, 1 day, above the pivot that carries you above this swing higher, above this 23,000 area? If you can get an impulsive breakout, so you see how volume's dropped off since right here? Let's continue to drop off. And so if you see a spike of volume, it doesn't have to be up here, but just something more than this local area here. And you see a nice large candle spread that closes as it breaks through that pivot and gets through this 23. That's going to be the first thing you're looking for. Most of the time, it'll break out above it, pull back to it, test it, and then go. So if you can see something like that, I mean, again, I think you just move pretty easily through this and you end up here. You know, you still want to get above what I have as a triangle here, but man, yeah, I think that really opens it up to rallying much higher. But I think that is, as what you're counting, I think is going to invalidate your count, though, I think, on that, right? So, yeah, you know, again, you know, I think a lot of people are going to try to get in on these really short time frames, and they're going to get caught because if this is that kind of bottom after this, you know, this year and a half, 2 years of sideways and this strong drops down here, a lot of, you know, going off here. I mean, if that's that bottom there, then we're going to be rallying up pretty significantly. I think at least until this area here. I think we might get a more of a major pullback up here, this high volume node. So upper 20s, 30,000 kind of area. I think that could get us, you know, a wave 1 up there and then wave 2 on the pullback. And then we'll break out on a wave 3. Why? Because your wave 3s, usually your third of 3s, are going through your major resistance areas. And so if we look at this descending resistance here, this diagonal, or we look at this horizontal right here, either way, I think you get a 1, you get a 2 on the pullback, and the 3 is the breakout through that area. And that's going to be a sharp, hard move up. But retail's not going to enter down here. Retail's going to find reasons why it has to keep going down. Again, I can't guarantee you it won't go down, but right now the structure is quite bullish. It's good, you know, again, it's good structure so far on the shorter time frames. We just need to see it continue up through this, you know, 12-hour, one-day pivot and break out above this kind of 30, you know, 23,000 area here and see if we can get some aggressiveness out of that demand in there. They're kind of looking there, right? So yeah. But anyway, yeah, so that's what we're kind of looking at here, right? Let me kind of bring this back down in here. Kind of do this. And so locally it starts with a, you know, that same type of breakout above the 1 hour pivot. And again, the idea that maybe this is 1 and this will be 2, so it'll be 3 of 3 that breaks out. That's what we look for, right? We've got resistance right here. I'll just kind of leave that right there. So it's right here. We got the pivot right here, the horizontal resistance. So again, 1, 2 gives us 3 of 3 on this breakout through here. And that's where you usually see the most volume come in. Right? All right. So yeah, so there's that, guys. That's what we're kind of looking at the moment. Let's jump ahead here real quick. Oh man, we've been talking a bit here, haven't we? Sorry about that. Oh, by the way, I've got this Bitcoin dominance chart, and I had this look that maybe we still had a wave 4 up here toward the weekly pivot. I'm not so sure with this drop back here. It's dropped back into wave 1. I think maybe this could be ABC is 1, 2. You know, maybe ABC is 3, 4, ABC is 5. 1, 2, 3, 4, 5. AB. Or, you know, AB, 1, 2, 3, 4, 5. So if this Bitcoin dominance is dropping off, that usually means that Bitcoin's rallying, right? So again, we have this here while it's dropped or while it's rallied here, right? So if this continues to drop on down here, I think there's a good chance this flat may be done right here, and we're coming down way down here below 33 to finish up. Now, obviously, this is significantly lower here, right? If we're looking here from way up over here, right? So if we think in terms of the final wave, right, 5 waves up from the beginning of when this started, right, the first 5 waves from December, or, you know, from 2009-10, well, it makes sense that we hit the lowest lows here, right? Significantly low down here below 33, maybe below. We've got the weekly S1 pivot here at 28.5. That would make sense, right? Everybody all in on Bitcoin finishing out, right? Potentially. So I'm watching this Bitcoin dominance chart here as we go through it. Let me see here. Let me see here. Hank's got a chart here. I guess I'll look at this real quick. We'll see what this is. Okay. Oh, you're skipping the idea that this is a triangle here, huh? I mean, we looked at some possibilities when this was built out that maybe this was ABC here. I think it fits better as a triangle. But, I can't guarantee it's not. Let me see here. I mean, you really have to kind of figure out what that count is going down here then. I mean, do we look at this as 1, 2, and then 1, 2, 3, 4, 5? So then 1, 2, 3, 4, 1, 2, 3, 4, 5. See, I think if you're counting it, I think that's maybe a better way to count that. Just looking at this real quick. But yeah, we'll see as far as what that is. That's a deep 4, though. Man, oh man, that is a really deep 4. And this is a shallow 2. So normally if you have a shallow 2 and a deep 3, then your 4 is going to usually be around what wave 2 is. So I would have expected to end, down in this area, kind of where we're at. Just general, again, you look at guidelines with Elliott wave, not rules, obviously, but, and you look for the look, right? And so, often if you've got that little wave 2, you don't usually have some expansive, huge wave 4. Because with a little 2 usually is an overextended wave 3, which is what you would have here, which leaves just a small wave 4 and a small wave 5. Most of your damage is done in wave 3, significantly. And you have still trying, which is why your wave 4 stays small, and then just kind of just peters off there for wave 5, usually. So, yeah. Yeah, Hank. I'm just saying, I think, again, if this count was to be correct, I would have expected wave 4 to end right here already, but maybe it could end here. Maybe. I wouldn't expect it to get way up in this area at all, though. Yeah, no. So, yeah. Does it make sense? So, I'm not calling for anything. You guys gotta understand. I mean, if you've been following for any length of time, I don't call for anything. I forecast. We look at what's going on. We trade what we see, right? I think you guys get way too caught up in this hopium of, oh my God, alt season or Bitcoin insane targets, all these things, rather than really trading. And so it all becomes emotional. And if you're emotional in the market, you're going to lose your money, period, end of sentence. Okay, guys? Yeah, so, but yeah, so now we're going to see, again, watch locally. See, do we get the breakout? Look on the daily. Do we get that breakout? These things add to the idea that maybe that bottom's in. If we're breaking out through this area up here, again, that's a big move toward the idea that the bottom's in. Matter of fact, if we're breaking out up here at this swing high up here, well, again, I've got it as a triangle. If we're breaking out above that, what I told you guys at 30,333 kind of thing. If we're breaking above that, I don't see much of any reason to think that we're going any lower. I think that really ups the odds significantly that the bottom's in. So, yeah. NFBP22, what's up, man? Yeah, you've moved to Forex, man. I love Forex. Yeah, man, that's my bread and butter. Oh, man, made so much stupid. It was so good the last year and a half, man, with the dollar being bottomed out and coming up, man. Let me see here. Oil. Let's jump into oil here real quick. So, potentially oil tops out. Potential, I don't know if you really want to call it a double top, maybe. But I'm kind of looking at this as potentially topped out here with a 1 and a 2 here. Need to see a breakdown below 95.28. If we can get that, that says, okay, likely we've got a 1 and a 2. And then we're heading down lower locally. Now, if we break out above here, I think with the depth of this pullback here, I think there's a good chance that we're probably breaking out through the swing high up here. And so the all-time high, this is WTI, by the way, guys, just so you know. It's not Brent. 147.09 back in July 11th, 2008 was the all-time high. So I think we could be headed up there if we break out above that top. But right now, I don't see much of a reason to think we're going to do that. As you can see, we dropped through on volume and large candle spread there through the daily pivot. Round up, we're getting rejected there right now. If we get rejected there, I mean, that should send us down lower. That should really suggest that more likely than not that top may be in right there. And so I've got, locally here, I kind of zoom back into that 1 hour there again. So it depends. I gave them an initial target of this daily pivot area here, secondary target of the 4 hour pivot. If we break down below 106.82, that should signal that wave 2 is complete, wave 3 is in progress. Minimum expected wave 3 down here at 84.55. That means it carries it below that validation level. And we just look for a continue lower. And if you think a recession's coming in, that makes sense, right? Who's going to buy stuff? Oil is not, first of all, who's going to travel? If you don't have money to travel, who can travel, right? So some of the largest purchasers of oil, airlines and cruise ships, right? Who's going to go on trips and cruises and whatnot? So demand's going to be down there. If we go into a recession, everybody's worried about their job or they're losing their job, which we're already seeing people cutting back, right? Firing people, right? 10%, 20%, 30% of the workforce. Who's going to buy things? Things are made of oil, right? Plastics are made from oil. Who's going to buy it? So if you have lack of demand, who the heck's going to buy? Why would price continue to rally? So that's what we're looking for. We're seeing, do we get that? Again, usually, as I mentioned before, oil is an indicator of what's going on with the economy, right? And so oil potentially topped out over here in March, right? Maybe said it's done. The NASDAQ topped out in November last year. The S&P and Dow topped out at the beginning of January, basically just over a month afterward. It was the end of November when the NASDAQ topped out. If you guys were following me rallying up to that, I said the NASDAQ would lead the way because it was leading the way up, right? What was rising? Remember, we had the breadth of stocks that were rallying as price continued to get higher were getting less and less. And those that were taking it up were your big tech stocks, right? That's why the NASDAQ went up. The NASDAQ is very tech heavy. The S&P is decently tech heavy, but it's got a little bit more mix in there. And then your Dow is much more broad-based, right? So, I remember I said, if there's a top coming in, when it does, we're going to be signaling with the NASDAQ, right? And everything's going to kind of follow after it. And so far, that's what's happened, right? So we'll see. Do we get that? I know everybody's hoping for a strong rebound, right? And so a strong rebound with that. The NASDAQ here. Let's see. Where are we at with the NASDAQ? Okay, so NASDAQ gapped up this morning. Potentially, when I zoom in, it looks like maybe this is a diagonal here. So we've got an initial target kind of this, where we're at here. So if we're breaking down back below 1, then that says wave 2 is done and wave 3 is in progress. But otherwise, this would expect to be wave A. Wave B pulls back to the 4-hour pivot. Wave C comes on up here about the 50% retracement level there at about 1409, right? But again, coming off the swing high back here in November, right? End of November. We've got a 1-2, 1-2 potentially. And then this was 1-2. And so then we would expect, I'm going to tell you right now that this is not going to be happy. If this is correct, we're going to have a strong push lower, wave 3. Wave 3s are often violent, right? That's when everybody, wave 1 kind of happens, and goes up. And as it happens, everybody's like, oh, it's just, if it was the other way, it's a dead cat bounce. Here it's just a pullback before it heads higher, right? Wave 2 goes up. They're like, see, I told you. Breaks down below wave 1, and they go, oh, wait, I'm wrong, right? And they start loading in. And usually it takes, another revolution here, 1-2, before people start kicking in, right? So you get this 1-2, 1-2, 1-2. And every time it doesn't make that higher high, and it breaks back down to make a lower low, you're getting bigger buy-in by the market. And so usually that's around 3 of 3 or 3 of 3 of 3. And that's when everybody's short, everybody kind of gives up, we break down, and it's a strong move down. So if the count is correct, then sooner rather than later, we're kind of working on this bigger move down, right? But it's not just the NASDAQ. it's also S&P, right? S&P, I got initial target here. Again, flat correction up here of this blue supply structure around wave A. Secondary target up here maybe around 39.20 or 39.30 up here in the orange supply structure on the 1 hour. But again, if we're breaking back out of here, you know, swing high up here, beginning of January, January 4th, right? 1, 2, 1, 2, and then 1 flat as a 2 here. See these two targets? Finding right here, finding resistance right at the lows. Break down below, boom, there we go, right? Get a big move down. Probably down, you know, you can eyeball it down here around 3,000, right? Large volume node, high volume node there. If it does, right? Now, if it breaks out above wave 2 up here, same thing with the other one, well then, count's invalidated, and things get kind of interesting then, right? But you don't go here and go, oh, it's definitely going to short, you know, definitely going to drop down and you short it. That's silly. Give it, you know, look for a breakdown below the swing low. Here, if it just continues up here through that wave 2 up here, this swing high at 42.02 and 25, well, then things get interesting. Then we start looking at, okay, is there something else going on? Or maybe is this 1, 2, 3, 4, 5, in which case we'll get this rally up here toward 45.90, 4,600. Right? If we're breaking out above wave 4 here. So, you know, we'll look at that as it continues to go on. But, you know, those are kind of things you want to look for. Dow Jones, again, broader based, right? So, again, potential flat correction going on. Targeting up here around that wave A, maybe. Is where I'm kind of looking if we can get up there. But breaking down below the swing low, that would be wave B says, hey, we're headed lower. Again, same idea on the larger time frame here, right? Topped out up here on January 5th, the day after, right? Or is that January 4th? Let's see here. Oh, January 5th, the day after the SPX, right? After the S&P. 1, 2, 1, 2, potentially 1, 2, right? So it gives us 3 of 3. Big breakdown, right? Kind of targeting this area down here, right? Because I think we would get 5 down here toward this swing low. Or this swing low over here. Because this would be, that's that March 2020 swing low there. This is, I've got 5 waves up. 1, 2, 3, 4, 5 up here, right? 1, 2, 3, 4, 5. As it gets through there. Man, this thing's just moving everything over. There it is. That's what I'm looking for. Again, 1, 2, 3, 4. Potentially ending diagonal here for 5. Again, they drop down there. So, you know, again, a lot of, you know, a lot of things leaning toward potentially down further, but we need the breakdown. We need to see the breakdown. If we break up through wave 2 here, again, maybe we look at this as 5 down as a leading diagonal, or maybe even some kind of ABC, right? Maybe some kind of ABC. Though it's kind of short, you know? Yeah, I guess it's not. It's kind of long, actually. Because if this is to be 4 here, man, you know, yeah, we'll see. We'll see how it plays out. Again, just looking there locally, right? See what's going on with that. Now, I'm about to pull up the DXY chart right now. Let me see here. Do I already have it up there? I do have it up there. All right. Here we go. So DXY, what's going on with the dollar, guys, right? So we're kind of questioning right now about what's maybe going on. There's not a lot of definitiveness. The idea is either we're building a flat here for wave 4. So A, potentially B, and then C here for wave 4. Or wave 3 is still in progress here, and this is, you know, 1, 2, 3, 4, 5 heading up for wave 3, right? So that's kind of what we're looking at the moment here. It's just sideways, so there's not really any definitiveness on which way it may be. The 4 hour looks like it wants to rally up a bit more, at least locally. if I look at this on the 4-hour, it's just an ABC, and then we broke down below wave B. And this looks like maybe 1, 2, 3, 4, 5. So could potentially mean that wave B is complete here. So there's, your 1, 2, 3, 4, 5 maybe done. But, again, this is just 1, 2, 3 here. Maybe there's a triangle going on here. So A, B, maybe C, D, E before you get wave 5 up. So as long as we continue to go sideways, just kind of leaves us in limbo. We break out above wave 3 here, then I'm looking at 107.26. If we break down below wave 4, I'm going to look for a breakdown below 101.646. And if we can get that, that might suggest, hey, that wave B may be completed. The ABC here already. I said 5, but ABC because ABC down, ABC up. And then we'll look, again, initial target around this wave A swing low, but potentially down here toward 99, which gets us in this previous area of wave 4 here. Wave 4, the lesser degree. So, it's just levels right here, watching it play out. Overall, I think we've got further up still with the dollar, though. I think we still, I've been talking about this since January of 21 here, when I talked about the likelihood that this was the lull. Remember at that time, I talked about how the currency markets generally reverse around the first of the year. I talked about how basically the market was all short, right? Over 95%. So it was too much, right? And the idea that likely may have signaled bottom all there. We did all that. And so, at that point, we were looking up here at around 116, 113 up here. So still kind of looking potentially at that as we get up there. But I don't think it's done yet. I don't think we're done. We do have a bit of bearish divergence here on the daily, which could just work, again, in the idea that this is wave 4 pulling back here, and then we get the wave 503 kind of thing handing out there. As far as the weekly goes, we've reset down here on the weekly, trying to rally back up. Broke through all the important levels. Monthly, we're up here at the monthly. So again, monthly at the top. It's just up in the top. Can stay up there a bit. But don't forget, this is kind of what we're looking at here. We rallied up to this resistance. If you do support at the bottom, resistance at the top, support at the bottom. Look at the EQ providing resistance support. We have this what appears to be reaccumulation going on here potentially. We've got the rally back up here. Doesn't have to be reaccumulation here. We'll see. But you notice we kind of hit the resistance here. So if we're popping out above that, I think that really kind of opens the door up. Again, based on the height of this, you got a pattern target up here of about 155, which is just ridiculous. So I don't know that I really feel that pattern target much, but right now I think it's important to see what happens in this area. Do we get the breakout? Or do we get rejected in this general area and sent back down? And I think that's going to kind of tell us what really is going on more or less with it. But, if we look at this here, 1, 2, potentially 3, 4, getting a 5. Or 1, 2, and then 1, 2, 3, 4, 5, right? So 1, 2, 3, 4, 5 maybe. 1, 2, 3, 4, 5, and that's the count. That's what we're kind of looking at. The idea that we break out through significant resistance on a wave 5, though, doesn't, to me, make a whole lot of sense, which is why I'm still open with the count as we continue to go sideways. Because usually, again, it's your third of your third that usually breaks out, right? And so if the dollar pulls back, that's going to signal generally that the markets feel like there's a risk-on environment. And so, there would be less headwind in the face of like Bitcoin rallying, maybe even stocks rallying. But, again, the difference between Bitcoin and stocks is Bitcoin has just dropped so significantly already, right? So, we're talking maybe mean reversion, even if dollar continues to rally, right? But ultimately, these are all different markets, guys. You've got, this is the dollar market. It's not the same as the legacy market. It's not the same as the Bitcoin market. And the Bitcoin and legacy markets are not the same. They're similar, not the same. All of them take risk into account. And if the dollar's rallying, that's a risk-off environment for the dollar, which usually, it's contagion, right? It usually spills over into the other markets because it's kind of telling us, well, why is everybody getting these dollars, right? And more expensive dollars, what does that mean, right? It means, if you're a company, it means all of a sudden all that debt you've been piling up over the last 2 years with the easy money from the Fed, that means all of a sudden you have to pay that back with more expensive dollars, which means you cannot use your revenue to really increase your business, to streamline production. You start laying people off. You shrink down production, right? You're not as competitive. All of a sudden, more of your money is going to servicing your debt because the value of the dollar is going up. It's become more expensive to do so. If you're a large, especially international company or a small country, U.S. debt is denominated in U.S. dollars. It must be paid in U.S. dollars. So if you owe U.S. debt, you have to get dollars. Again, remember I was talking about liquidity issues? Having trouble getting their hands on dollars? And so the dollar continues rallying. Look at how much more expensive it is. You can look at from '08 here to now. If you've been accumulating debt over the last 15 years, look at how much more expensive it got to pay that debt that you've been accumulating. Look, from 2008, look at this. It's almost 50% more expensive to pay that debt, right? It's crazy. Let's see here. Yeah, that's a heck of a channel right there, right? This touch over here is back in we're on the dot-com bubble crash up there, top of the bubble. Comes down the low here. I mean, look at this. This high up here is July of 2001. The low down here is March of '08. Dot-com bubble, great financial crisis. Here we go, right? So yeah, we're looking at that. It gets kind of crazy, right? Let me see here. 4-hour Bitcoin Stoke RSI oversold since 19. That's 2 days. Should see a pullback soon. Yeah, I mean, I'm thinking so, but here's the thing. Again, if the bottom is in, guys, here's the thing. Let me get over to the other chart here. Where is it at? Now that, by the way, this is the CME futures here. Notice this range. Notice the volume dropping off. And then it starts picking up here as we're rallying up. That's usually a good sign. Generally, when we're looking at ranges, coming through here, there's your big drop there. And it continued to broke out higher. There was no follow through lower until here, right? At which point on lower volume, you're finding lows. There's no selling into the lows. So, potentially suggesting that supply is either worn out or just expended, right? So we'll have to see. Now you want to see, do we get follow through again through the upper level here? Same thing we're looking at the charts, right? By the way, notice big old gap, but it is a weekend gap. That's a gap nonetheless. So just watch it there. Here's the thing on the CME here. If we can get, see where that gap is right here, where the previous support becomes resistance here. If we gap up over this here, so there's a gap here and then there's a gap in the same area on the way up, that'll leave this as an island reversal, which is rare but significant when it happens. You basically gap down into it and then you gap back over that same gap. Now, it doesn't have to be the exact same size. It can be smaller or larger, but the idea is you have a gap and a gap horizontally, a gap over your gap. It's usually a pretty significant reversal. So if price continues to rally up here, that may be something you might want to watch on the CME here, right? Let me get back over here. Okay. So coming over here on the 4-hour, yeah, again, 4-hour makes sense, right? Let's say you're just trading pivots, guys. You're looking for a rejection in the pivot area. You're not usually looking for a rally up through this. But if you get one, if you don't get a significant pullback into this area and you get spike of volume, large candle spread breaking out above this kind of, again, this 23,000 area, you should expect a nice strong rally up into the R1 and maybe higher. Maybe up into this 27.5 area. Remember, that's that same target, remember? So the idea would be if we get a, large candle spread, large volume kind of thing popping out through this that carries us above 23 here, my thought is we're going to get an overextended wave 3 up here, giving us a wave 5 up in that mid 27s there. And with something like that, then, again, looking to pull back. At that point, we should get a decent pullback. Remember I said probably up in this area that we get that decent pullback? And so from here, that might give you a target of something like, see that 50% retracement right above, well, what's currently right now the 4-hour pivot. But it makes sense, 61.8 down here. See where these higher volume nodes are? It's 61.8 to 70.5. So yeah, I could see a big move down here, and then everybody goes, oh, look, remember what I told you, wave 1s. Dead cat bounce, dead cat bounce. It's going lower, right? And this is what's going to happen. If we do that, we start coming back down here. See, I told you. And they get louder about their calls. They'll be patting themselves on the back because they believe it's going to resume its course down, right? And then you get the rally and the breakout back above here. And as it's rallying, they'll say, oh, but look, it's going to reject before there. It's going to continue down lower. And when it breaks out above there, if they're lucky, they'll go, oh, crap. I was wrong. I need to get in on it. But most of them won't. Most people will be too scared to buy then. And so, again, it'll rally to break out, and then we get above our, 33, 37, 83 area, significant area. Yeah. So, generally, as long as we can get a nice, 1 hour, 4 hour breakout here, it closes near the top of it, large, volume, large candle spread, carries us, continues rallying above 23. Again, I think we get up here around 26,000 or so for wave 3. We pull back for wave 4, and then we get wave 5 up here, around the 28,000 kind of area. And then we get the big pullback. And then we get the breakout higher. And, still, retail's not getting in. The large accounts, for the most part. Now, guys, when I say your large accounts, I'm talking in general. There are some good traders out there who have large followings. Most of those with large followings, though, are really just silliness. And if you become successful as a trader, you'll notice those things that they say that don't make a whole lot of sense. And I'm not out, as usual, I'm not really out here to try and call anybody out. I don't normally do that. But just be careful when you're out there. If people are using words like I guarantee, or they get louder and louder and louder the more opposite price goes of their direction, these are usually signs to be careful blindly following them. Doesn't mean they're going to be wrong. I mean, even a broke clock is right twice a day, right? But what it does mean is that there's a lot of non-understanding or purposeful ignorance on their part, because their goal is just to get you as a follower because they can make money off that, or to sell you something they can make money off of. So just be careful with that. Yes, I see it so many times. Somebody gets in there and you got a new trader and they come in. And this person makes, a lucky call, right? They get right. And that new trader is brand new and they don't know what they're doing. And they go, oh, look, they were right. So I'm going to blindly follow them. I've told you from day one, don't even blindly follow me. That is not going to do you any favors. Learn to understand how the market works. Learn how to trade it correctly, right? Learn proper risk management more than anything, guys. It's the boring thing that nobody wants to do, but it's the one thing that's going to make sure that you stick around long enough to where you get to the point that you can trade effectively. If you think you're going to come in today and be successful tomorrow or today, no, it's not going to happen, guys. First thing you need to learn is proper risk management. That way you make sure that you can stick around while you continue to make wrong trades, right? Because you're going to make wrong trades. If you're new, you're going to make wrong trades consistently. Until you get better at it. Just like brand new playing the piano or the drums or the guitar or whatever. You're going to hit the wrong chords. You're going to do it wrong consistently at first until you get better and better and better, more used to it, right? Yeah, Blaze, man, what's going on, buddy? Right now, again, potentially a leading diagonal off this. So, I'm real interested if we continue to pull back here at the previous swing low. You see we got all this resistance support right here around this 20,900 area, or 20,950. It's kind of where I'm interested first. maybe 20,005 to 20,006 right here, this higher volume node. If we're dropping down below that, I think, again, this may be wave B here, and we'll have wave C coming down. And so there's two ways that can happen. One is it kind of, see, even if it gets down here, it could be like we have here, this running flat. You know, maybe this is one here, and this is A, this is B, and then we get a flat down here. Head up, I don't know, you know, flat expansion here. There's so much overlap right here. You guys just have to be careful. This is why I'm sticking with those larger time frames, because this count is not clean, especially right here. Look at this, guys. This is the issue. See this right here? And then followed by this right here and this right here. That's the issue. A lot of sideways, and you have these two big things here, and then you have this sideways. And so there's a couple different ways to count this. So I'm more interested in longing on an impulsive breakout above that swing high, especially one that carries and closes, you know, above that 23,000 kind of area. Really kind of, I guess if I want to put it here, really kind of this supply structure right here. So above the 23,000, 23,100, the lower end of this. If we can get that breakout above that, I'm feeling pretty good about that 28 area minimally. Oh, you know, overall it's 5 waves up. But you know, if we're dropping below this area, I mean, you can look right here, but I think we come on down toward this wave 4 down here. So I don't know that there's really any pivots around here. Let me see, 15-minute. See this, by the time that happens, the next day's 15-minute pivots will be reset. So these pivots aren't going to work very well. But again, looking at that kind of wave 4 area there, which again is this previous area resistance support. If we're really kind of dropping below there and it's looking more like 5 than 3 waves, you know, it would suggest that maybe this is top here and we are going to a lower low. In which case, that 15,700, well, no, guys, this thing's moved up further, right? So if you're going to go down further, the odds are that this is a wave 4. It gives us a wave 5 around 415. Potentially. But as always, guys, if this is going to be the wave 4 and this is going to be the wave 5, all wave 5 has to do is do 5 waves down below wave 3. So, you know, it could rally prior to that. This is just the normal extension that we would look for. But we've sold a lot. There's been a lot of selling going on here. A lot of people out of position now. Ton of volume. You know, I think the odds are more toward upside. So we'll see how that plays out there. Andrew, have a great day, man. Well, it doesn't matter that they're on anywhere else. You know, you still have the below and the above, right? So yeah, potentially could be an error on there, sure. Anomalies, sure. But if I'm trading Coinbase, I'm not looking at Binance. Why am I looking at Binance? That doesn't make any sense. I'm not trading Binance, right? I mean, you can kind of look at that. I did it again. You can kind of look at that, maybe get an idea of what's maybe, you know, looking for some confluence in price action. But again, if you're trading, say, the CME futures, you know, looks different than what we've got going on with Bitcoin, right? Because they didn't break their low here was 19,600. But you're going to trade that CME chart, not the Bitcoin chart, right? So yeah. Yes, I get that. If it's an API error, price not actually go, I get that. I said it could be an anomaly, yes. But you know, I'm not going to spend my time traipsing through charts all over the internet, all these different exchanges just to figure it out. When I've got an idea of, listen, if we get that breakout, then that's what we're doing, right? If we get that breakout, then we're looking good. If we get the breakdown here, here's our targets lower, right? That's what we're looking at. Yeah. So, Luminary Man, what's up? You said those wicks happened during an internet outage last night? Probably related. Could be. Definitely could be. Sure. But again, you know, sideways here. You know, even without this in here, it looks like 5 waves up, right? 1, 2, 3, 4, 5, right? So, you know, again, potentially wave 1, pull back for wave 2, which again goes back to what I was saying, which is 3 of 3 is the breakout through this diagonal resistance, and then horizontal resistance. So see, I don't spend a lot of time. I don't have a lot of time to go through all this stuff when I'm trading. So I tend, I'm already in. You guys have seen where I'm in, right? So I've got room. If we're coming down the downside, I know where I'm watching. That's what I've talked to you guys about, and the possibility of what we're looking at. But kind of leaning toward the idea that we're just going to get a smaller pullback here. Maybe kind of toward this area here. Maybe again as a 1, 2, 3, 4. So we get a 1, 2, and then this will be 3 of 3 through that resistance, which should then send it at least up here, 24,900, potentially up to 25,977. So yeah. So as new traders, a lot of times you guys are out there, especially if you're new with Elliott Wave, you're trying to look at all those little interior counts, 5-second chart and whatever, and it's really just it's a waste of time. If you're doing Elliott Wave, generally use the 1 hour chart and you go with that. But Elliott Wave again is about these ideas of what the trend is and where it may reverse, rather than here's the exact targets that we're looking for. And if you understand it that way, if you take it that way, it makes your Elliott Wave life so much easier. You shouldn't be spending 24 hours a day charting, guys. Trading should do two things. Give you more time, give you more money. If you're not doing those two things, then you're not doing it correctly. And so what does that tell you? That's not a dig on you. It tells you, okay, well, I'm not doing it correctly. What is it that I need to change so that I can be successful with it, right? Does that make sense, guys? Trading is just all about accepting when you've made mistakes and then using that as an opportunity to correct those mistakes so you don't make the same mistakes in the future, so you can continue to get better and better at trading. That's what it's all about. Okay, guys? All right, listen, man, I got to get out of here, man. I'm really over on this, but I appreciate y'all joining in as always. Man, oh man. I'll be back on Friday, 11 a.m. Central Standard Time. Hope to see y'all there. If you want to join us, again, guys, jump on over there, howtotradetowin.com. We'd love to have you there. Say hi if you do when you get into the chats and the rooms there. Don't be scared to talk. Most of our members don't say anything. It is what it is. They just remain members. They take in a lot of knowledge. We've got lots of traders who've been there for years and years and years that provide a ton of a look at the charts all throughout the day. So a lot of information going on through there to pay attention to. Look for me here on Substack, guys. Jump on, look for my name, Christopher Inks, INKS, and we'll get these out over the next month here. And if you're already subscribed to the Market Breakdown through Review on Twitter, their company, I'll be moving you guys over here to this one. It'll be a lot better newsletter, a lot better quality coming out, and we'll have all that going on, okay? There you go, man. As always, remember, the only thing you control in the market is how much you lose. That's it. That's it, guys. As I've saying through the whole thing here, risk management is where you should be putting all your effort to begin with. Then learn this other stuff. Because guess what? You can get as good as you want at this other stuff. You can get really great at Elliott Wave. But unless you've got your risk management figured out, you're going to lose trade after trade anyway. Because one, you're going to be emotional because you're not using proper sizing for your positions. And you're not convinced of where you should be using your stop losses and why. Okay, guys? All right, you guys. I will be back on Friday. You guys have an amazing week. Take care, and hopefully I'll see some of y'all over there in Discord.